Welcome to the Riskwiser Zone. I'm your host, Lewis, and we're glad you're joining us today. As we navigate the complex world of finance and economics, our goal is to provide you with insightful analysis and expert opinions to help you make informed decisions. We begin today by examining the latest developments in global trade, specifically the recent announcement by President Trump regarding reciprocal tariffs on countries around the world. The move has sent ripples through international markets, with various nations reacting differently to the news. The UK, for instance, has been imposed a 10% import tax on its exports to the US, which is lower than the 20% tariff imposed on the EU. This development is seen as a result of Prime Minister Starmer's efforts to build a rapport with President Trump, including an invitation to meet King Charles in June. While some argue that this approach has yielded positive results for the UK, others caution that it may lead to unnecessary concessions being made to the US administration. David Hennig of the European Centre for International Political Economy notes that Starmer's strategy could draw attention to perceived UK faults, potentially leading to targeted measures against areas such as digital safety laws or food stamps. On the other hand, Leslie Vinjamuri, director of the U.S. and Americas program at Chatham House, believes that the UK has played its hand extremely well and is likely to be at the front of the queue for a deal. She suggests that a potential visit by Trump to Scotland to meet the King could be a significant win for both parties. As we delve deeper into this story, it's essential to consider the broader implications of these trade tensions on global markets and economies. The EU has vowed to respond with robust retaliatory tariffs against the US, while other nations such as South Korea, Japan, India, and Australia are also seeking to strike similar deals. The key question is, how will these developments impact investors and businesses in the coming weeks and months? We'll be exploring this topic further, along with other pressing issues in the world of finance, throughout this episode. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the complex world of international trade and economics, where a recent move by the U.S. has sparked intense debate. The introduction of tariffs by the U.S. government, led by President Trump, aims to address the country's economic concerns, but critics argue it may have far-reaching and potentially damaging consequences. To understand this issue, let's break down what's happening. The U.S. is imposing tariffs on imported goods from various countries, including some of its closest allies. Proponents of the move argue that it will help protect American industries, create jobs, and boost economic growth. However, opponents claim that these tariffs will lead to retaliatory measures from other nations, sparking a trade war that could harm global economies. It's essential to consider multiple perspectives on this issue. Some experts believe that the U.S. is taking a necessary step to address its trade deficit and protect its interests. Others argue that the tariffs will ultimately hurt American consumers, who may face higher prices for goods and services. The situation is further complicated by the fact that some countries, like Germany, are already talking about reducing their dependence on the U.S. To put this into context, it's worth noting that the global economy is still recovering from the 2008 financial crisis and the COVID-19 pandemic. Many countries are struggling with debt, credit issues, and economic stagnation. The introduction of tariffs by the U.S. may exacerbate these problems or create new ones. As we navigate this complex landscape, it's crucial to remain informed and consider various viewpoints. We'll continue to monitor developments and provide updates on how this situation unfolds. For now, let's take a step back and assess the potential risks and consequences of these tariffs. It's clear that the world is watching closely, and the outcomes will have significant implications for global trade, economies, and politics. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're wrapping up today's show, with a look at the latest developments in global trade, as President Donald Trump announces sweeping tariffs on imports from around the world. This move has sent shockwaves through financial markets and has sparked concerns about the potential for a global recession. According to reports, the U.S. tariff rate on all imports has increased to 22% from just 2.5% in 2024, with rates as high as 34% on China, 20% on China, 20% on the European Union, and 24% on Japan. Even some of the world's poorest countries, such as Myanmar and Sri Lanka, have been hit with tariffs of 44% and 37%, respectively. The move has been met with criticism from leaders around the world, including Australian Prime Minister Anthony Albanese, who called the tariffs totally unwarranted, and Italian Prime Minister Giorgia Meloni, a close Trump ally, who said they were wrong. From an economic perspective, these tariffs have the potential to disrupt global supply chains, increase costs for consumers, and lead to retaliatory measures from other countries. As Fitch Ratings U.S. Economic Research Chief Olu Sonola noted, this is a game changer not only for the U.S. economy, but for the global economy. Many countries will likely end up in a recession. It's worth noting that the impact of these tariffs will vary depending on the country and industry. Some sectors, such as agriculture and manufacturing, may be more heavily affected than others. As investors, it's essential to stay informed about these developments and consider how they may impact your portfolio. While it's impossible to predict with certainty how these tariffs will play out, it's clear that they have the potential to increase volatility in financial markets. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.